Today is Monday, September 8th, 2025. Welcome to your daily news update on Blip Brief, small but almost everything updated daily. Wading through the sheer amount of information out there can feel impossible sometimes, trying to figure out what actually matters, but that's why we're here, for the deep dive. We cut through that noise. Our job is to sift through it all, find those critical insights from the last, say, 24 hours and bring them straight to you. It's your shortcut to being genuinely informed.
Exactly. We distill it down, the essential nuggets that shape your world, whether it's Wall Street's latest moves, geopolitical shifts, or even some amazing science. And we don't just tell you what happened, we try to explain why it's actually relevant to you right now.
Okay, let's kick things off then. India's economic pulse, the markets. What's the outlook for today, Monday the 8th? Global cues, well, they're looking somewhat optimistic. GIFT Nifty is pointing higher. Japan's Nikkei is up about 1%. Sets a fairly hopeful tone, doesn't it?
It does, yeah. But let's maybe add some context from Friday, September 5th. Indian markets ended, or basically flat on the surface. The Nifty 50 barely moved. The BSE Sensex dipped just a tiny bit, like almost 0% change. But, and this is key, under that surface, a lot of churning. It wasn't flat at all if you look closer. Significant sector rotation happening.
Right, and that's where it gets really interesting, as you say. Headline numbers flat, but one sector just took off. Auto, BSE Auto, Nifty Auto both up a solid 1.3%. We saw Eicher Motors climbing, 2.4%, Mahindra and Mahindra up 2.3%, Maruti also strong 1.6, 1.7% gains. But here's the flip side. While auto was flying, IT heavyweights, they took a proper hit. ITC down around 2%, HCL Tech 1.7%, TCS dipped 1.5%, Tech Mahindra lost 1.4%. So this stark difference, is it just a one-off or are we seeing a real shift here? What's driving this, do you think?
Well, it's fascinating, isn't it? That divergence doesn't seem random. The auto strength could well be anticipation around potential GST benefits. We can touch on that more. For IT, the why isn't crystal clear from the sources for Friday specifically, but it's likely reflecting, broader global tech sentiment, maybe a bit of profit taking, or specific company headwinds. But then you have Jefferies being really bullish on Hexaware Tech, predicting a 27% upside. So it tells you it's not necessarily dump all IT, but it is definitely a moment for, let's say, careful stock picking within the sector.
Okay. And speaking of market excitement, the IPO scene is absolutely buzzing right now. PhysicsWallah, the edtech unicorn, they filed a revised DRHP. That's the big document before an IPO, and it's for a pretty substantial amount, 3,820 crore. Then there's Urban Company. It's gray market premium. That unofficial price before listing is apparently soaring. Their debut is around 1,900 crore. Price band set at 98 to 103 rupees per share. But the real headline grabber, maybe for 2025 so far, LG Electronics India, planning a massive 15,000 crore listing. Is that right? October.
That's the report, yeah. 15,000 crore. Easily the largest this year. And you also mentioned the smaller ones. Supreet Chemicals, Kripalu Metals, Neelachal Carbometallics. So this flurry, it's not just blind confidence, maybe. It's likely companies seeing a window. We're seeing variety too, edtech, consumer services. It suggests maybe a broadening appetite. The key question is always, are investors looking long-term, or is there a bit of FOMO, fear of missing out, driving those premiums? But overall, it signals robust demand for new listings, both investor appetite and companies wanting capital.
Right, and quickly gold prices. Still hovering near record highs, aren't they? Getting close to $3,600 an ounce.
Yeah, holding strong,
Yeah.
driven partly by those U.S. rate cut expectations, but also this bigger de-dollarization trend you hear about. And China adding to its gold reserves again for the 10th month straight. That's significant. Central banks shifting strategy.
Okay, let's pivot now. Government policy, corporate moves, stuff that really impacts the Indian economy. And maybe your wallet, too. We had that exclusive statement from Finance Minister Sitaraman basically urging industry, invest now.
She's saying demand visibility is clearer, and it ties into India's big plans, right? Bullet trains, shipbuilding yards, that whole Viksit Bharat 2047 vision.
It's a strong signal, that call to invest, trying to get domestic capex moving. The insight isn't just infra creates jobs, it's that these specific huge projects, they offer long-term visibility, potentially de-risking things for big companies. The real test, though, is if the private sector actually sees that clear demand visibility she mentioned, especially if consumer demand feels a bit patchy elsewhere. It's basically saying, okay, private sector, your turn to lead the growth.
Yeah, but then you get these complications, like with the GST reforms everyone's talking about. On one hand, good news if you're buying a car. Hyundai is already cutting prices up to 2.4 lakh. Vienna gets cheaper by over 60,000 rupees to some by that huge 2.4 lakh figure. Effective September 22nd, that's a clear win. But on the other hand, your food delivery. getting more expensive. So Metro, Swiggy, Magic Pin are hiking platform fees. Plus, there's an 18% GST on delivery charges coming in also September 22nd. So cheaper car, pricier dinner delivery. You win some, you lose some, I guess.
Exactly. What's fascinating here is that mixed impact, a tale of two sectors almost. Autos might get a boost, maybe helps demand there. But food delivery costs, that hits daily budgets directly for a lot of people. And we're hearing about challenges for FMCG companies too. Distributors apparently refusing big stock orders, worried about getting stuck with old inventory before the new rates kick in. And then controversially, there's that GST cut on Beatus from 28% down to 18%. Health experts are definitely raising concerns there. So yeah, it's complex. Seemingly simple tax changes have these ripple effects right down to your household spending.
Right. Okay, let's talk money flows. Foreign capital. Even as Indian companies line up for IPOs, regulators like SEBI are trying to make it easier for foreign portfolio investors, FPIs, to come in. They're looking at an automatic window. Let's unpack this. The idea is to streamline entry, cover maybe 70% of registered FPIs, boost inflows. Sounds good. Yet in August, FPIs pulled out quite a bit of money, offloaded over 9,800 crore from financial services just in the second half of the month. So SEBI is rolling out the welcome mat, but FPIs seem to be looking for the door. What's going on?
It looks like a contradiction, doesn't it? It raises questions about, current sentiment. The SEBI move is forward-looking, making India more attractive down the line, smoothing the path. But the August outflows, that might just be FPIs reacting to immediate global stuff, interest rates maybe, a stronger dollar, or just reevaluating specific sectors, like financials seem to be. It shows that gap sometimes between policy intent and actual market behavior. You can build the road, but global conditions still decide the traffic. Plus, you had CEA Nageswaran cautioning that nominal GDP growth might miss the FY26 target. Benign inflation sounds good, but it can sometimes dampen nominal growth figures, which investors watch.
And on the corporate front itself, some really big moves. Vedanta outbid Adani for Jayaprakash Associates, JL, a 17,000 crore offer with a big chunk upfront, 4,000 crore. Adani Group, meanwhile, massive plans of their own, talking $60 billion into power by FY32, partnering in Bhutan for a 6,000 crore hydro project, and Oyo, the hospitality startup getting ready for its IPO, renamed its parent entity to Prism.
These are huge commitments. What they tell us fundamentally is there's still this strong underlying long-term belief in India's growth story, whether it's acquisitions like Vedanta's or massive greenfield projects like Adani's power plans or Oyo prepping for listing. These companies are betting big. It reflects confidence that the market can absorb this capital and eventually deliver returns, even with global uncertainties floating around.
Okay, so India's internal engines are definitely working. But we can't ignore what's happening globally, can we? Because things happening in Washington or Kiev or the Red Sea, they eventually ripple back here. To Wall Street, to us, let's start with a pretty dramatic story out of the U.S. That raid at a Hyundai plant in Georgia. Immigration authorities involved, hundreds arrested apparently, and around 300 South Korean workers ended up being repatriated by their own government. Then President Trump weighed in with a strong warning to foreign firms. Investments welcome, but follow our immigration laws.
Yeah, and connecting that to the bigger picture. Actions like that, they send ripples through international business. It signals much tighter scrutiny on labor, on immigration compliance. It could definitely impact supply chains, maybe make multinationals think twice about investment decisions in the U.S. It's a reminder, really, that political stances can have very quick, very real operational impacts for companies.
Then this worrying infrastructure story. Undersea cables cut in the Red Sea on Sunday caused internet disruption across parts of Asia, including India and West Asia. The cause isn't clear, raising immediate worries about sabotage.
It really underscores how vulnerable our global digital backbone is, doesn't it? The potential fallout, economic, communication-wise, it could be huge. Whether it's an accident or deliberate, just shows how interconnected and maybe fragile our world is now.
Meanwhile, shifting to Japan, Prime Minister Shigeru Ishiba resigned on Sunday. Political setbacks, and the yen immediately slid. Policy uncertainty hitting the currency hard in a major economy.
Absolutely. Political instability in a place like Japan has considerable knock-on effects. Currency volatility, investor confidence takes a hit, could shift trade dynamics, especially when the world's fourth largest economy seems a bit shaky. Politics driving economics right there.
And energy markets. OPEC Plus agreed to bump up oil output, but only moderately, starting October. Oil prices nudged up slightly on that news.
It's that balancing act they're always trying to perform, isn't it? OPEC plus us, trying to manage prices, keep market share, factor in global demand, geopolitical risks. It's a very delicate needle they're threading.
And sadly, the conflict in Ukraine saw a major escalation. Russia launched what's being called its largest air attack of the war overnight, hit the government building in central Kyiv. Tragically, at least 2 people killed. President Zelensky is pushing hard for tougher action, more sanctions. He's saying Putin simply doesn't want talks.
And this raises that critical question again. How will these renewed attacks impact everything else? Energy markets, political alliances, the humanitarian crisis. And you noted President Trump's statement, readiness for phase 2 sanctions, planning to speak with Putin. It suggests the international response is still very much evolving, potentially escalating the economic pressure too.
Okay, let's bring it back closer to home. Your money, your future. We saw this point highlighted, a dilemma many people are facing. Your salary grew 6%. Your child's school fees grew 12%. Now what? Ha! That really captures the cost of living challenge, doesn't it?
Yeah.
Specific costs outpacing general income growth.
It really does. It's more than just general inflation. It's a sharp reminder about real income, especially for families. The takeaway is that maybe old savings plans aren't cutting it anymore. People might need to rethink investments, maybe even careers. It shows how specific sector inflation, like education, can squeeze household budgets much faster than the headline economic numbers might suggest. On a slightly different note, we are seeing financial tools adapting. Banks, fintechs pushing things like FD-tied credit cards, making credit perhaps a bit more accessible for people who might need it to bridge these gaps.
And another personal finance angle. Those golden visas for wealthy Indians. Demand is apparently peaking, lots of interest. But globally, the rules are getting tighter. Like the U.S. EB-5 program facing uncertainty, Portugal banning the property-linked visa route.
Right, so what's changing is why wealthy families are looking at these. It's not just about mobility anymore. Increasingly, it seems they're viewing them as tools for, like, risk hedging, estate planning, managing tax exposure in this uncertain global climate. The golden visa is becoming less about just a passport, more about a comprehensive wealth strategy in a volatile world.
Okay, let's end on something genuinely positive, inspiring even. From science and tech, imagine plastic waste, not just vanishing, but actually helping fight climate change.
It's a fantastic breakthrough, this one. A team of chemists figured out how to take PE plastic waste, old bottles, textiles, and transform it. They turn it into a new material called beta. And here's the revolutionary part. A beta is apparently amazing at capturing CO2, carbon dioxide. So instead of that plastic breaking down into microplastics, polluting everything, it could become a tool to actively pull CO2 out of the air.
Wow, that's the aha moment, isn't it? It's not just recycling plus lightning. It's turning a massive pollution problem into a potential climate solution, tackling 2 huge crises at once.
Precisely. Turning waste into a weapon against climate change. It's really promising stuff.
Absolutely. Well, that wraps up our deep dive for today. We've covered a lot of ground volatile markets, key policy shifts here in India, some major global events, and that incredible bit of science.
Indeed. And as we were talking about those Red Sea cables, it really does make you think, doesn't it, about our reliance on this global digital network. What if these kinds of digital disruptions become more common? Or worse, intentional? What could that mean for, well, everything? Supply chains, trade, even just our personal cybersecurity day-to-day. Something to mull over.
Definitely food for thought. And just before you go, a quick note. This deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.